Hey, it's Corbin. I know it's been a while since I've had time to put together a video, but I've had some recent successes that I wanted to talk about, helping some homeowners and their foreclosure situation. And anyone that knows me knows that I've been doing real estate for a long time, that I've been helping customers for quite a few years to uh, hopefully get out of the pre foreclosure or foreclosure and save their home. But I've also helped them in situations where they weren't able to do that to find a buyer for their home and so on. Well, now that I'm an investor, I actually have become, one of the buyer options if you do end up in that situation. But the first thing I do, though, is I don't even consider trying to buy the home first, unless you tell me that's what you want to do, that you're just done with it and you want to sell it. But even then, I try to sit down and ask these homeowners, including you, if you do contact me for, a consultation, if you're in the same situation, I ask them, hey, catch me up to speed. Let me know how and why we got here. Well, number one, in a lot of cases, it's not all your fault. In many cases, it's greedy lenders, greedy banks, greedy mortgage companies that have given you loans that they never should have given you in the first place. They may have been able to qualify you, say, on a certain interest rate, but they didn't tell you the rate was going up, or maybe they did, but they didn't tell you how much it was going to go up and how much the payment would go up, and so on. In some of those cases, you may be able to hold the bank or the mortgage lender or broker liable for getting you into that situation. So that's why I ask up front, hey, catch me up to what's going on. How did we get here? Why did we get here? And so on. Then I ask, okay, paint a picture for me of what your current situation is. What's going on at home with the family, in relation to what's going on with the house and so on. I want to know, like, if everyone is not really worrying about it a whole lot, or if this is a major stress factor and causing problems at home and so on, because we need to move faster, if this is causing, problems in the family and so on. And then finally, after we discuss all of that, I will, if you haven't already told me, I'll ask you, well, what would you like to happen? Do you want to look at some of the other options? Do you want to sell the house? Or are you just done with it? Screw the bank, let the bank take it back. And I'll tell you, in that situation, you're going to get screwed more than the bank will, and I'll tell you why at the end of this video. All right, so after all of that, I go through some of the options if that's what you're open to. The first thing is we can talk about reinstating the loan by catching up the back payments. Now, if it was a temporary situation and you just need to get caught up and you're going to be able to continue the payments beyond that, this is a good option. However, coming up with the cash necessary is a problem. So, first of all, I say, did you speak to any or ask? Did you speak to any friends or family about a loan? What did they have to say? How did it go? When you spoke to a lender, did you talk to any other lenders about your situation, especially your current lender, asking them, hey, can you help me with this? They may take like the arrears payments that you owe, the back payments that you owe, move it to the end of the loan, and then you just continue paying at this point as if nothing ever happened. And then all that happens is at the end of the loan, 20, 30 years from now, whatever it is, you make those final few payments that they move to the end. And chances are at that point, inflation's probably gone up, your income's probably gone up. So you may even pay it off way before that time ever comes. You can also talk to other lenders about refinancing your home into a lower rate or some other situation with better terms. You can also, again, only do this if it was a temporary situation because you don't want to borrow funds from your 401k and then not be able to pay them back and end up losing all those funds because it went back into foreclosure. But again, if it was a temporary situation, you can talk to your company or the administrator of your 401k and ask them if you can borrow up to 50% of your investments to help you catch up on your payments. The nice thing about this is it is a loan, but it's a loan to yourself or to your 401k. So whatever interest you're paying is actually going right back into your 401k. So it's really just like you had the money invested in some stock anyway. And actually, it's more sure because the 7% or whatever the interest is that you're charging yourself is guaranteed. There are other options, however, the interest rates might be kind of high on these. Those are doing bridge loans, hard money loans, or personal loans. Personal loans, um, if you can do them, you have to have decent credit. So you may not be able to do it, but maybe another family member can co-sign or even do a personal loan because the interest rates on those are as low as 7%. They can be 9, 10, 11, 12%, something like that, to help you get out of the situation. Bridge loans and hard money loans, that's where I can come in to help. I do have some big money investors who are willing to step in and help you, catch up on your payments, even help you with extra money. And by the way, you can do that with a personal loan as well. Borrow enough to catch you up, borrow some extra so that you have some reserve. So if some emergency does happen again in the future, you've got that money set aside in the bank. So going back to the hard money loans and the bridge loans, yes, I can help you with those. I have plenty of people that can provide that funding, but again, it's going to be high interest, probably 15, 16, 17, 18% interest. So only if it makes sense would you want to go in that direction. Again, I mentioned earlier talking to your lender about a loan modification. You need to start that in plenty of time in advance, way more than like 30 or 40 days in advance of the auction, because you need time to apply for the loan, work through the loan, work with the bank, and so on. And if it's up to like, you know, 15, 20 days to the auction, there's not going to be enough time to do that. And they're not going to cancel the auction to do a loan modification at this point. Now, to do a loan modification, typically you're going to need income of 2 times your mortgage payment. You'll also need to show proof that you have 2 times the income of whatever the mortgage payment is, and you have to be able to prove it through proof of employment. Um, you also have to be current on all taxes and insurance. They will not do a loan mod if you're delinquent on those. And you will also need to write a letter of hardship, which I can assist in that as well. And in that letter, you're going to describe how and why you got behind and how and why it's no longer an issue. So again, they just want to make sure that if they do a loan modification, that you're not going to be in the same trouble again, that you basically, it was temporary, you got laid off, it was a medical emergency, whatever, but it's done now and you're able to pay. Third option is myself or any investor, although I have my own money that I can invest in some homes. It depends on how much. I have other investors that I work with that can go up to like $10 million purchasing homes in cash. Or, you can go to other investors as well if you know someone. This should be one of your last options, though, unless again you say, I'm done with this. Let's just, let it go, but in this case, you're still saving your credit. And again, I'll talk about that in a little bit, what actually happens if you do allow the complete foreclosure and auction to happen. As a part of the cash purchases, by the way, that I do, I make sure that all of your moving expenses are paid. Movers, moving trucks. If you have to rent a hotel or an apartment temporarily, I'll help with that. Um, Also, I purchased the home as is. You don't have to do any repairs. It doesn't matter what shape the home is in. I will buy it. You pay no closing costs or other fees, so there's no hidden fees. Also, I don't do to you what some of these other We Buy Ugly House companies do. And I do buy ugly houses, by the way. Actually, I'll buy any kind of houses. But some of these other companies, they will give you a quote, and then when they come out to sign the contracts, the quotes for less money, and then they make up excuses. Whatever I offer you up front is the offer. Um, Also, I can help you find your next home. I basically work with a lot of realtors, but I can also help in these situations with homes just like yours. You know, a situation where someone decided they were going to sell it to me, because, they didn't want to, have the foreclosure on their record and so on. Um, I may be able to put you into one of those homes and, for low payments, low interest, and so on. One more thing that I wanted to mention is uh, we can also do a leaseback deal, especially if you are able to make the lease payment. I'll lease it back to you for up to like 5 years. And at that 5 year period, as long as you haven't missed any or been late on any of the loan or the lease payments, then you can buy it back at the preset price that we would agree on today. You could buy it for that price 5 years from now. Then the next option is similar to the cash option, but it's creative financing. So if you have a loan that has a very low interest rate on it, and interest rates have gotten very expensive lately. So the loan itself, the mortgage itself with a low interest rate is very valuable itself. So I might even be able to offer you some more money to put into your pocket if you wanted to do a creative financing deal. Basically, where I did take over those loan payments, I bring the loan payments up to date and so on. The final option is, um, well, it's not the final option, but one more before the final option is to file bankruptcy. I don't recommend this though, unless you truly are completely insolvent. And oftentimes, and almost every time, it's just a delay. So, in a lot of cases, at least a Chapter 13 does not make sense because now you're spending more money on attorneys and court fees and so on when it's basically just going to delay the foreclosure, and it's still going to go through at some point. Now, a Chapter 11 is a completely different thing. Chapter 11, Section 506, that's where you borrowed more money or there's more liens against your property than what your property is worth. You may be able to file what's called a stripped down bankruptcy, to basically take those other liens off of the property. And if the company, mortgage company, or bank, or whoever, has those liens, are the ones that are foreclosing on you, you may be able to have that lien completely removed and have that mortgage canceled. So that's something to consider. All right, so now is the last option, and that is to do a short sale. With a short sale, it's better than a foreclosure or a bankruptcy, because with the short sale, it still shows up on your credit, but it does show that you were cooperative with the bank and you did try to work with them. And what happens in a short sale is you end up selling it for less than what the home is worth, but now you're no longer obligated to it. Now, as far as your credit hit with a short sale, it will probably only impact you for, 1 to maybe 3 years. But my short sale that I actually, yeah, I did a short sale, some time ago, and was able to repurchase another home 2 years after that. Now, if you let it go into foreclosure, we call that the atomic option, the atomic bomb option, and that's because um, the house doesn't, come back to you. Um, it goes back to the bank or whoever bought it at auction, and that's just the beginning because then after the foreclosure is complete for 7 years, you can no longer qualify for a loan, uh, and that is a mortgage loan. You can also cannot qualify for 7 years to buy a car. It's also unlikely that you'll be able to qualify by yourself for 7 years on an apartment rental because they're going to be worried that you're not going to pay your rent. Also, for 7 years, you may not qualify for many jobs. And I can tell you firsthand, um, after our foreclosure in 2008, I got laid off in 2013, which was 5 years later, and we were almost to the point that we'd be able to, that it would be off of the credit. We had 2 more years and maybe be able to purchase a home, but got laid off. But uh, almost all the jobs, because I was in cybersecurity at the time, and I still do some cybersecurity. No company would qualify me because of my background check on my credit report. And I'll tell you, so cybersecurity are jobs that are impacted by foreclosures and bankruptcies. Law enforcement will not hire anyone with foreclosures and bankruptcies. Financial institutions, anything that has to do with money, dealing with money, will not hire you if you have a foreclosure or a bankruptcy on your credit report. And again, so for 7 years, you're not going to be able to get any decent jobs. And I experienced that for like, it wasn't even just 2 more years, it was like 4 or 5 more years before I was able to get back into the industry and get a job back. Also, for 7 years, you will continue getting calls from your various bill collectors. So that's pretty much what I wanted to go over tonight, and I've been talking almost 20 minutes now. But if you have any questions, go to myauctionbuster.com or give me a call at 725 6400. That's 725 241 6400, and I will help you out. And again, my first options are to work with you, figure out what your options are, and if you are not ready to just let everything go or say let everything go, I am going to do everything in my means to help you save your home before we start talking about purchase options or just letting it go and so on. All right. Thank you for listening. Have a good night.